The US stock market was pummeled and it only seems to spread to other markets. Crude oil fell below $50 a barrel and major institutions have fallen to their lowest levels in years. With the Fed meeting just around the corner, this would be an opportunity for them to hold off on increasing interest rates, possibly instantly pushing up the markets. Let's see what has happened so far. You came here for the truth, so let me unveil that for you. Today we're going to look at what has happened with China and Japan selling off more treasuries. We're going to look at the price of oil. I want to show you what's happening with Goldman Sachs and other financial institutions. So let's begin by taking a look at this. I have shown you this chart many times in the past and must clarify once again that I did not create this. This can be found directly on the Treasury's own website. What you are looking at here is the numbers from October, which are, in fact, the newest statistics. If you go to this page at the bottom, you can scroll down and it shows you that it's from December 17th. So this is brand new information that I'm bringing to you. And you can see here throughout October 2018 compared to September 2018, the numbers for China and Japan have continued to decline. You're still looking at over $1 trillion a piece, but the number is getting closer and closer every single month, it seems. It's going to take a long time to get rid of all of that debt, but it seems as though they're going in that direction. Why they're going in that direction, I'm not suggesting either way. I'm just telling you the trend that has appeared. If you want to look at the numbers, you can see on this chart over the last year what each of these countries have done. In every video I do of this, I always like to mention who is buying if somebody is selling. Oftentimes though, people seemingly don't get that part of the message, but I'll just tell you anyway. It seems that domestic individuals have been buying up this debt that countries like China and Japan have been selling. In fact, if you look at the column for September compared with October, it looks like basically everybody is selling. The only one I noticed on here was Germany and Cayman Islands that was actually larger this time around. So that's the chart itself. I just wanted to give you an idea of exactly what's happening. You can see right here, China holdings of US treasuries going back into levels not seen since 2017. They have been selling off over the last few years. In fact, if you really look at the trend that has formed since 2013 when it peaked out at over $1.3 trillion, they've been selling off slowly but surely ever since. Japan is at the level we haven't seen since 2011. So they have really been selling off here over the last few years, doing just what China has also done. Foreign holdings change in US corporate stocks. If you look on the right hand side, you can see month after month after month of sales that are taking place right here. Obviously, with problems occurring in emerging markets, you're looking at this also being a problem basically everywhere today. And it will seem that individuals need to liquidate their positions and put it into what they believe is safe. You're looking at oilprice.com, a resource that I use when I want to get not just the oil price, but information about oil itself. It's kind of like the Bloomberg of oil. And you can see here, WTI crude falling below $50 a barrel. Brent is now at about $59 a barrel. So you're looking at this here being an issue for all of these commodities because oil is kind of the key indicator that they're all watching to give us an idea. Is it a recession? Is it a slowdown? Are we going to have a supply glut? Is it going to be an issue with transportation and so on? There's so much interconnected with oil, obviously. So keep your eyes on what happens with the price right now. You're looking at crude oil falling way, way below all of its moving averages right now. I just wanted to give you an idea. You could see those three lines up at the top. That would be the moving averages that they just far, far below, and it's going to take a long while to get back up over those. Now you're looking at the FANG stocks in this chart here. Throughout December alone, these stocks have come down quite a bit. According to the index, which let's just round it off and say 3350 on the index, today it has fallen below 3,000. So the prices have clearly declined, whether we're looking at Facebook, which has really been hit hard. You could see Google, for example. All of them are basically in a bear market right now, and that is coming at a time that we are still being told today, even after all of this 2.5 months of a brutal market, that these are excellent buys. You need to get in right now, but we're going to downgrade the stocks. So although we do see them increasing here for the next little while, well, it's not as good as what we thought it would be. Just looking at the US markets and how they have really tumbled over the last few months, I just wanted to give you an idea of what has happened, particularly the NASDAQ falling into a level that it was never expected. They never thought that the NASDAQ would ever go down, and here we are today seeing it into a correction territory. The S&P 500 has far gone below its 200-day moving average and moving into levels we haven't seen for a little while. This is just showing us that on the chart. I just like to show the technical indicators as well as all of the mainstream sources, the government sources. I want to give you every level, every piece of data so that you can piece it together yourself. What's different about this channel, not to go on a rant, what's different about this channel than others is that most channels, they have some sort of agenda. Whether you agree with the agenda or not, they are trying to project something onto you that you should sell stocks, that you should buy stocks, that you should buy this particular stock, why this particular company is the best and you should get it and I have it and therefore you have it. Well, I don't like to do that. And of course, this is actually one of the worst ways. What I do is one of the worst ways to actually have something like we do here on this channel. But that's the way I want to do it. And I know that I have really, really good people out there who want this type of information. It's a really small group of people compared to if I were to have done something where I just project it, where I just tell you this is the way to go, and a bunch of people who agree with that information obviously would be able to grab on and so on. But let's not even go there. Enough with the ranting. Looking at all of these indicators, I think it's important to see where they are and where they're going. Always, every day. This article here out of Reuters is getting into the financial companies and what they're doing, and it said this: but looking behind headline numbers showing healthy loan books, problems appear to be cropping up in areas such as home equity lines of credit, commercial real estate, and credit cards, according to the federal data reviewed by Reuters. You've always heard me talking about this. Now, no, we don't have the exact same problems that we did back in 2007 with real estate. That's obvious. But the problems that are underlying this entire financial system are still there. It's not exactly the same. You don't have two crashes that reappear after a period of time. That doesn't occur. It's always coming from a different angle because they've made this system a mess. And a lot of people who are doing well today are not going to be doing well tomorrow. That's the way it goes. They're not prepared. They're too arrogant. This is Goldman Sachs just showing you right now how bad this stock has performed. Currently, the market cap is sitting at about $62 billion. The stock is at 168. You're looking at this particular stock coming down 40% from its high. You see that it peaked out here, if I put my mouse, what looks like roughly March 5th of 2018. Today, it has come down 40%. So you want to talk about correction territory. You want to talk about bear market. This is 40% down from its peak, and it is a massive, absolutely massive corporation. They get themselves into trouble. You see the stocks start to drop. But what happens to these companies as their stock starts to drop? Is there a risk of contagion? Is there a risk of defaults in this company? You could have this spread to others. What happens to the clients that are using the services of this company? What happens to all of that financial garbage that is sloshing around in the books or off the books of this particular company. 40% down is very dangerous. That's the type of thing you see in a recession. We're not in a recession according to the government figures, but that's what you see when you see stocks coming down by 40%. And it's not just one, it's not just Goldman Sachs. If you look at the global systemically important banks, the too big to fail banks, these are in a serious bear market. It is actually nearly 50% in that case when you include banks that are coming out of Europe and so on, that are just absolutely beaten down like Deutsche Bank and so on. That's all for this video. If you found it informative, please give me a thumbs up. If you enjoy the rants, give me a thumbs up. If you hate them, give me a thumbs down. If you want to see more information, give me a thumbs up. If you don't want to see any more videos ever again, give me a thumbs down. I enjoy all of them because just like all the negative comments, they support the channel. So thank you. Thank you very much. Last but not least, if you want the financial education you were not taught in school, these two books have it all. You can actually flip through them at Amazon. There's a link in the description where you can click on that, get more information. If you want the audiobook instead, many people have been getting that these days, that's available at themoneygps.com.